following me around. Hello, Lisa.
Hello, how are you?
Great. We've got about 35 seconds to go.
Okay.
Uh, you got the PDF I emailed you this morning, I'm sure.
Yes. Yep.
Okay. What I had in mind was I'd just kind of talk a little bit and ask you questions about it, and then you could answer.
Okay.
And then if I have any confusion, I'll ask something else. And my volume's a little low on my earpiece here. Turn that up. So I did put a couple of advertisements. Well, not advertisements. I didn't pay anything to, but I put a couple of postings up notifying people about the live stream. So hopefully we'll get a few viewers. And of course, as always, I'll repost it for further viewing later. But it is 2 o'clock. Hello, everybody. Welcome to the channel. My guest today is Lisa Stepp. She's with Mpire Financial here in Knoxville. And I brought her in today. I want to talk about the process of getting a mortgage. It can be complicated. There are a number of steps to go through. And, typically the process between the time you make a offer on a piece of property and get a signed contract and then get to closings, usually about 30 days. It can run 40, even 45 days, or sometimes longer, depending on really unusual circumstances. But on the other hand, it can sometimes be much shorter. And in particular, Lisa tells me that she has closed a couple and really unusual situations in as little as 6 days. So I'm
A
just
lot of
going to
work
go.
though.
Yeah, that was a lot of work there, wasn't it, Lisa?
Yeah,
Getting it done that quick.
that's good.
But
Yeah, it's good. But it's
you
easy
did
when
it.
you have a team, but it, it,
Hmm.
it comes with a little bit of stress for everybody involved. But it can be
Yeah.
done.
So yes, ma'am. So what I'd like to do is just kind of go through the process here. Now, most people kind of get the cart before the horse a little bit. They go out and start looking for property, and then they start thinking about their financing. And you really need to do it the other way around, I think. And I'll get your opinion on this. But the first step is to get a pre-approval. And I want you to talk a little bit about that. And I'd like to discuss the difference between a pre-approval and a pre-qualification.
Okay. So what we do here at Empire is we have links. We make it very easy for anybody to apply with us. And it's, iPhone or cell phone friendly. And you just go through the process of putting in all your financial information, your social security number, because when you go after a pre-qual or even a pre-approval, the lender always has to pull your credit. So, and if you're somebody that uses some of those credit apps out there that always tells you what your score is, some people are very concerned that that app will tell you that your credit score is 700. We pull it in the mortgage world, and now you're down to a 670 or 680. It's because the logarithms are different. If you buy a car, if you buy a house, if you just want a credit card, everybody's looking at different things. But the most important thing is to have your credit pulled, to give your lender that you're working with your income, your assets, have the conversation with a loan officer. What type of property are you looking for? Are you looking for a primary? Are you looking for a secondary residence? Are you looking to build? Are you looking for land? Are you looking for a short-term rental property? All those things are very important for the loan officer to determine what kind of loan or product that you're actually going to need. The difference between a pre-approval and a pre-qual, we only do pre-approvals. I'm not going to waste my partner's time showing homes when I haven't seen that income. There is, we're all up against the GSEs, the Fannies, Freddies, government, VA. Everybody has their own guidelines. Had a situation recently where hourly wage earner, but hours were decreasing. And we'd seen that year after year after year. Well, that opens up a whole different scenario and required more assets. So if you don't show your income and your assets, and we're looking at 2 years of W-2s, are you a wage earner, are you self-employed? all of that matters. And if you're a veteran, do we have your certificate of eligibility? What is this purchase going to look like? All of that matters. But, I had seen, wasn't my transaction, where someone had entered a purchase agreement, had a very large earnest money deposit, only to find out he was never pre-approved, but the letter actually that the lender gave them actually appeared to make it that he was actually pre-approved. And in essence, it's not. So these are large financial transactions. You want to work with someone that you know what they're doing, and you show your income and assets and let the lender go through like an underwriting scenario to ensure that you're actually improved and have your plan together, and that can be communicated to all parties. So when you do find your home, it's much easier. It's a true pre-approval. And today with the NAR settlement, is it a home that is offering your buying agent compensation? Or as a loan officer, do I need to make sure there's enough funds for this borrower to make sure that the buying agent is paid? All of that is relative today. And a pre-qualification isn't really worth the paper that it's on, because no one's vetted anything. And it can really put people in harm's way.
Okay, exactly. And that was what I wanted to bring up, because the pre-qualification is really a very cursory look at the buyer. And the
Right.
pre-approval is a more in-depth look. It's not going through the underwriting process yet, but it's much more in-depth. And a
Right.
pre-approval actually means something, whereas a pre-qualification, like you said, is pretty well not of any value. Now, I did have a
Right.
couple other quick questions there. You
Sure.
mentioned for the pre-approval, you're going to do a credit report. And of course, there's usually a charge for a credit report. So that is, I assume, usually paid up front. But the other question I had, and more important, because that's probably what, $35 to pull a credit report?
Oh, they can be as high as 77. We've been seeing
Okay, well,
77.
less than $100.
Less
If
than
you're buying a
$100.
house and you're worried about $100, then you got a problem.
You have a problem.
So
Absolutely.
the thing I was wondering, though, a lot of people are very conscious of a hard credit pull versus a soft pull. So on the pre-approval, is it a hard pull or a soft?
It is a hard pull. It is a hard
Okay.
pull. And what I do for my customers, I always credit that charge back at closing.
Okay.
And we want people to be dedicated to the process.
Mm-hmm.
And so that's why it's important for us to charge that up front. I do have lenders that will offer their credit with no charge. In essence, it becomes a little bit more expensive for the borrower, but we do have those different options. But that's why it's important to have an in-depth conversation with your loan officer. What is your intent? What are you looking to do? Because for me as a broker, I have 85 different lenders that I get to choose from. And what is that application going to look like? Because everybody has different requirements. So it's my responsibility to pick the best lender, best rate, the path of least resistance, if you will, because everybody has different. We can have the same product, but a bank versus a broker versus an independent mortgage bank, they're all going to have different guidelines. And it can be very overwhelming for a lot of people. What is your financial picture? Depends on the product that you're going after. There are certain requirements. And those requirements we have to fulfill, or you don't get the mortgage. So like me, I've got 23 years experience. You need to deal with people that have the experience to make sure that you get put into the best financial position. And with that, I even like to know, where do you want to be in 3 years, 5 years, 10 years? Because a lot of that has absolutely something to do with the transaction and what product you do pick based on the income and assets and where that person expects to be.
Okay. So after the pre-approval, then it's time to have the cart behind the horse and go out and find the house that you're wanting to make an offer on.
Absolutely. Yep.
And of course, you don't have to. You can go either unrepresented or just do the transaction. Well, if you do the transaction and the only agent involved is the listing agent, you are unrepresented. So you have to look out for your own best interest at that point. So you're better off to have a buyer's agent or really trust the seller's agent. And most sellers agents are ethical, and we're bound to be ethical and honest. But as with anything, there are a few, as you know.
Absolutely.
After you've got the contract, then you're going to have to deposit some earnest money, which you mentioned previously. And I'll just touch on that briefly because it's really not too much involved in the process of getting a mortgage. But typically, earnest money will be about 1 or 2% of the purchase price. And the reason for the earnest money is just to number one. Well, and the other thing is, here in Tennessee now, we no longer call it earnest money. It's trust money now.
Trust money now.
Pardon me.
Okay.
Trust money now, not earnest money. And it's old habits are hard to kick. I still call it earnest money.
Yeah.
But the reason for that is to show good faith on your part that you are making the offer and you're serious about going through. If the buyer defaults on the process, so they're otherwise qualified and they just say, I don't want to buy it anymore, then you lose your earnest money. I've only had one client actually lose earnest money, and that was because they had just come out of the military. They were doing the same job that they were doing in the military, so that was good. But he kept telling us that he was employed, and we never could get a pay stub out of him. And finally, come to find out, he was a 1099 employee. And of course, with that, as I'm sure you'll probably mention, you got to have a 2-year income from 1099 in order to be able to qualify for a mortgage. But that's about it for the trust money. So next, of course, now this is kind of confusing for me because typically they say the next step is to, quote, actually apply for the mortgage. But with you guys, they're kind of doing that at the pre-approval process, aren't they?
That's correct. Yes.
Okay.
You are applying at the pre-approval process. But people, different states, like California's escrow state, I think that's why we actually see it written the way that it is. And the application process can be interpreted. I have my purchase contract, my earnest money, or my trust money has been paid. It's sitting with the title company. We have proof of that. And now, we select a lender and now we submit that loan to the lender. So some people can interpret that as applying at that point in time. But that's when we go into underwriting. We have all the income docs, the purchase agreement. We are getting ready to order the appraisal. And at that point in time, we're asking the borrower, hey, if you need some recommendations, you need to shop for your homeowner's insurance. We know what their taxes are on the property, so on and so forth. Even though we do estimate homeowners in taxes at the pre-approval spot, because some states, like I lived in New York for a long time, it's not unusual to have a $15,000 a year tax bill.
I know exactly what you mean.
Tennessee. So, all of that is relative. But once you have your contract, we have documents, we have expiration dates on income, assets, we order the appraisal, wait for the appraisal to come in. We do have the underwriter look at it, and we do get a conditional loan approval from our lender. And that's the document that tells us, the agents, the borrower, hey, we need this document. We satisfy those, we get our cleared to close.
Now, at what point do they get the loan estimate?
We get the loan estimate when we apply and submit to the lender. We have a purchase contract. We do have an address. When we do pre-approvals, our address is always TBD, to be determined, because there are federal laws that trigger certain documents have to be presented to the borrower. So once we have an address, we have a purchase contract, we submit to the lender, we have 3 business days to generate all the disclosures, all the fees of the loan, even though we do that at the pre-approval stage, so we can vet what our closing costs are, how much our title is going to be, transfer taxes, escrows, all of it, to ensure that our borrowers have enough money to get to the closing table. But we have 3 days. Once we have that purchase contract, we submit to underwriting. We've got to disclose within 3 business days. And one of the documents in there is called the intent to proceed. Until that document is signed, we are not able or allowed to order the appraisal because that is the document that tells the borrower signs that tells us it is my intent to proceed to move forward. So then we order the
Okay.
appraisal for
Yeah.
them.
Now, is the loan estimate the point at which you lock in the rate, or how does that work?
It depends on current market conditions, what the borrowers are comfortable with. A lot of people are not comfortable floating a rate. So a lot of our pre-approvals, depending on the circumstance, like if it's a real shaky market and we've really seen rates start to trickle up at the pre-approval process, if our debt to income ratio is a little high, we'll take that rate up to protect our borrowers. We don't want to put a borrower in harm's way, depends on what's going on in the market. So we'll take a higher rate to protect that approval. But it's a conversation when we have a contract. Hey, here is today's rates. Rates can change multiple times throughout the day. I saw this morning that they went Fed rate cut now, and that can have a big bearing on interest rates in the market. So just really depends on the economic data, what the borrower is comfortable with. Hey, we've got this fabulous rate. Do you want to float or do you want to lock? So
Now,
because once
when
it's
you
locked,
mentioned the Fed, what were you saying about the Fed cutting their target rate?
and I saw a text this morning that some of the I don't remember who said, I don't know if it was NBC News released it this morning, but they want a federal rate cut right now. They don't want to wait.
Yeah, well, they do. What I didn't quite understand what you had seen there. The next federal Fed meeting is mid-September, isn't it?
Yeah, but they want that now.
So, well, everybody's expecting a rate cut in the next meeting at mid-September. I'm seeing
Yeah.
like a half a point cut is what most people are expecting. And a number of people I've talked to and looked at the reports online are thinking that there's going to be maybe as much as a total of a 1 point rate cut by the end of the year. So we got the September meeting, and then I think the next meeting is like the 1st of December. And I think they're expecting a rate cut in both of those meetings. The Chicago Mercantile Exchanges, who I watch to see what their predictions are on the Fed rate cuts, they seem to be pretty accurate over the years.
Yeah, but sometimes they get them wrong.
Well, anytime you're predicting the future, you're going to be wrong.
That's right. My crystal ball has been broken forever. So
I understand. And in fact, on that very subject, back at January, they were expecting 3 or 4 rate cuts this year from the Fed beginning in like May, and it hasn't been cut yet. So they're holding it high.
Yes.
And, Powell, Jerome Powell, the chairman of the Fed, was saying we need to keep it higher longer. Well, personally, I think he's kept it too high too long, but that's just me.
Yeah.
Is there any additional information we can talk about on the underwriting process itself?
Yeah. So and that's a real licensed underwriter that they hold credentials that they honor. Fannie, Freddie, VA, all the government loans, USDA, that they're licensed to review these loans to make sure that they're looking at guidelines and underwriting according to the loan product that we select. And their licensing for some people are on the line if they make a mistake. And so that's the bank coming and telling us, hey, we're going to give you this money, but I want you to satisfy X, Y, and Z. And, we make sure that when we personally, how we handle our loans here, we want, we've all been doing it for a very long time. We know what's going to be expected. If it's a very fast loan, we want all that information in. We had title in one day of the contract, which was phenomenal. So we were able to submit a loan with our title, with all the income, all the assets, potential deck page for our homeowners insurance. And we had only 4 or 5 conditions we needed to satisfy when we received the conditional loan approval. And a lot of
Lisa, you're having a little bit of internet problem.
Dates with their purchase contracts have dates where that loan commitment must be delayed. Oh, okay. I don't know if that's my internet. It just went
Yeah,
down
if
for,
it's your upload speed seems to be a little slow.
as it always
But
is on
yeah,
optical internet, right? So,
well, we got to look at that for you.
yeah,
So anyway, so the underwriting process really doesn't begin until well into the process,
into
if
the
I'm understanding correctly.
right.
So underwriting is not involved in the pre-approval.
No,
But
no. But
didn't
yeah, but we know those guidelines. A good
yeah.
loan officer, we know the guidelines. We know what the path of least resistance is according to that borrower. Every transaction is absolutely different.
Mhm.
I kind of chuckle when, someone will say, well, my neighbor didn't have to do this, or
Mm.
what? And it's because every transaction's different. FICO scores are different, asset position is different. It's each individual transaction, and that's just how we roll with it.
Mhm. Okay. And I meant to comment on this when you were talking about pulling the credit before, but as you mentioned, FICO scores are different. But the point you were making about the fact that people look at the credit monitoring services online and it gives one score.
Mhm.
Well, it's my understanding that there's a different score for every kind of product you want. If you want an automobile, there's one score. If you want a house, a different score. If you want a consumer product, a different score. So, or a credit card would be a different score.
That's correct.
So, yeah, so a lot of people do not understand that.
No.
And, I named off 4. I don't know if there's more than 4 or not. But,
Yeah. Well, if you want to buy a boat or RV, that's a little different. And those even
okay.
tend to be even a little bit harder financing to obtain.
Hmm.
It has been my experience in the past.
Okay. So the final step is cleared to close.
Cleared to close.
So we've
So,
got on my notes here, I got appraised value. We're looking for no unused or deposits, debt to income, below limit, credit, and so forth. I'll just shut up and let you talk. I got a lot of notes.
so once we go in, since you, um, when we know that we're going to put a down payment for this transaction, say it's $10,000. Maybe that 10,000 is sitting in a checking account. Maybe it's sitting in a savings account. Most of the time, depending on the product, we need to see 2 months of that money. So if all of a sudden your savings account, we could clearly see you typically hold a couple $1,000s in there. But now all of a sudden an $8,000 deposit comes in. I now have to tell the underwriter, where did this $8,000 come from? You're not allowed to go take a withdrawal on a credit card and use that for your down payment on your mortgage. So, but that's why we also review the income and the assets coming in, so we can pick up if there is a large deposit. Maybe the borrower forgot to tell us, hey, my grandfather just passed away. I know I'm getting a lot of money from his will. Boom. And they received it, but now we have to go prove to the underwriter where it came from. So we would need supporting documentation, from that estate says, hey, this is what they received. We deposited in the, all is good. So anything we see, we have to vet and prove most of the time.
Okay, I got a question on that. Assets are one of the things you look at, and a lot of people own assets outright. Typically like an automobile, but there could be other assets that they have, like for example a 401k. You could get a loan from that.
Yes.
Could a person that owns an asset outright get a loan using that asset as collateral and then use that money for a down payment?
As long as we have the paperwork trail to prove where that money is coming from. Yes.
Okay.
A lot of people
Very
will
good.
take a loan out against their 401k. That is perfectly legit to do that. Every circumstance is a little different.
Mm-hmm. Now, we mentioned debt to income ratio there a little bit. What are they typically looking at for a DTI?
Typically, on average, we want to see a debt to income ratio, including housing expense, every liability that is out there on the credit card or like on the credit report, every liability that they're paying. We will also bring in a monthly homeowner's insurance cost, as well as a monthly tax escrow. Maybe there's a homeowners association dues that are due. We include all of that. And we want that number to be 45% of total income and versus debt total.
Now, is that net income or gross?
Gross income. It's always gross income. So when you start pushing 45 plus on gross income, depending everything that's coming out of that check, I see a lot of people, most of us have to pay an exorbitant amount of money for our health insurance. We don't count that, but when you push 45% plus gross income, you don't have a lot of money to live off once you pay that mortgage payment and your other debts. You still got to buy food, still got to pay for your utilities. And we've got some programs that'll go much higher than that. And if it's a strong position borrower with $1 million in assets, we could go a lot higher than that 45. So each program, whether or not it's a Fannie Freddie product, VA, USDA, some products require residual income calculations to ensure there is enough money left over. Just depends on the program you go in. There's all different rules and regulations. Each product has their own set of rules.
Okay. Now, some other things that the underwriters are looking for before you get the clear to close is they got to have the homeowner's insurance in place.
Yes.
And of course, the title search has to be clear. But another thing that a lot of people don't know about is title insurance, and that's required for at least the mortgage amount. But it's a very good thing to get for the entire purchase price, because the title insurance for the mortgage company does not cover the homeowner for their equity. So I just wanted to throw that in there. And title insurance is not very expensive in the big scheme of things, and it does stay with you as long as you're in the home.
That's
so
right.
The other thing, cleared to close, when does it actually happen? Does it happen a day or two before closing or the morning of closing? When does clear to close? Because I've been in some, they didn't get the clear to close until like an hour before.
Okay. Well, there has to be the CD. We can't forget about the CD, the closing disclosures, which has all the accurate fees from title. And when we're dealing, and this could be a whole other different podcast, right? So when in talking about an LE versus CD, an LE is called the loan estimate. And there are A through H on there. There are things, if you put a fee in that A bucket, say it's $1,000, and you disclose $1,000, it's not allowed to go 2,000. You can reduce it, but you can't like, that's the no box. Like, you can't make that change. There's items borrowers can shop for. There's items that borrowers cannot shop for. And there are rules and regulations that if we disclose a fee on the LE, then that bucket can only change by 10%. And that is just to protect people in the industry from like a bait and switch situation. Hey, I told you it's going to be 112,000 at closing. No, we decided we're going to take it up to 200,000. Okay. And that's where the Dodd-Frank and TRID laws come in. So we have the LE. Those are our numbers that start. I mean, we don't know at that point in time what the true taxes are. And we wait for the title company to confirm that. So typically we use a national clearinghouse to disclose all the fees that we expect. And then the title company will give us the fees, and then we'll change them to actual. And then our CD has to go out 3 days prior to closing to give the borrowers time to digest. Do we need to move this money? I know I need X for closing. Am I going to wire it to the title company? But no more waiting at the closing table, waiting to know how much you have to have. I had a situation a long time ago where, and this was before Dodd-Frank and TRID and all the new federal regulations that we go through and why these documents are time sensitive. But he was waiting at the bank for 3 hours. Well, the people at the bank got a little nervous and they called the police. So he's like, I'm just waiting for my numbers. And I was tired of sitting in my truck, but they didn't know why this man had been walking around the bank for so long. That no longer happens. And it's great. I love it that we have deadline restrictions, and an LE and CD has to go out within X amount of hours apart, so on and so forth. I mean, that all of that information, it would be a whole hour plus podcast. But it gives the borrowers time to digest. Like, it has to be delivered, get a closing potentially Friday. Our CD must be out on Monday. If we do not get that CD out, we're not closing on Friday. We get pushed.
Okay, so my question on that then is, once the closing disclosure is out, are you cleared to close at that point at the end of the 3 days? Okay, that was my point. When does cleared to close happen?
As soon as we satisfy all the documents on that conditional approval. And the clear to close can happen after the release of the CD. So one situation we're working on right now, we're going to release, we know that we're releasing the CD. We have all the final numbers. The only thing we're waiting on is the appraisal. So we'll release the CD, and that's the money we need for closing. We expect the appraisal to come in as is, at value, no issues. We send that to the underwriter, and then we get the official stamp cleared to close, because that's the only thing that we're waiting on.
Okay.
So it's the underwriter's final look at the entire loan package in whole.
Okay. So can the clear to close go out a day or two before closing, or?
Yes. Yes.
Okay.
Yeah.
So that brings up another question I have then. It's my understanding that one of the last things I do is go back and verify employment and credit score and that sort of thing again, just before closing. When do they do that? Is that like the day before, the morning of?
Really, it depends on the timing of the circumstance. So we do deal with lenders that we can get a clear to close at 8 o'clock in the morning and still make a noon closing. We hate it to be that quick, because they are going to call and verify that the person is still employed. Mm-hmm. And most of us that have been around for a long time, layoffs happen. Mm-hmm. And we blow the transaction up because the person has lost their job. Or we hit a hiccup that, we can't get a hold of the person that needs to verify that, we want not cell phone numbers. We want a automatic switchboard number that we can get to somebody to validate that that person is still employed. Mm-hmm. There is a soft pull to make sure they haven't applied multiple times and have 2 mortgages going at the same time, or they haven't acquired more debt. And that's the reason I'm in my home, because at new construction, they bought a car, price went up, payment went up. They no longer qualified for the mortgage, so I was able to come in and steal it. But, those things all become relative. And that's where your conversation at the very beginning, talking to a loan officer, these are the rules that you're going to be up against. Once we pull credit, you can't go to the furniture store and buy a house full of furniture unless we know and can account for that in advance. Any new debt, we have to vet. You have to give us a statement. Most borrowers don't like that because you're jumping through hoops. And sometimes we can't even generate a payment on that. And it just really slows everything down. So once you apply for your mortgage, your credit is pulled, your pre-approval is out, your financial world stops, other than bringing in income from your pay stubs. No new debt, because you can put an offer in, have it accepted. Oh yeah, I've got plenty of money. Well, no. If you go buy a new car, your debt ratio could go too high and you could lose your transaction.
Mm-hmm. And that's happened a number of times over the years.
A lot of times, different things have happened.
Fortunately, never to one of my clients, but you hear about it.
We have all heard the horror stories. Yes.
Mm-hmm. Mm-hmm. Well, I think that pretty well covers all the notes I had to ask you about. So anything else you can add to the process?
No, I mean, it's a great time to buy. It's been a very long time since we've seen a lot of inventory out there.
Well, inventory is increasing. It's still not where it was by any stretch of the imagination. Right. It's about 15% over last year, but it's still about 15% down from what it should be. So I'm wanting to see more inventory
to increase. There's a
Rents are showing some pressure right now. I've been watching the rental market here, although I don't deal with finding rentals for people because that ain't my deal. That's a hillbilly realtor talking for you there. That just ain't my deal, you know?
yeah.
But I have been watching it because it does have an indirect effect on the purchase market. And I am noticing a number of relatively nice homes, including new construction homes that have been bought just for the purpose of being a rental property. And I've seen a number of them that have been on the rental market for 3-4 months. And they start out at, in fact, I was looking at one property, it was 1,700 square feet. And they started out at $2,700 and they kept bumping it down. They bumped down to 25, then they bumped down to 24. And the last bump down I saw, it was at 23. And then a couple of days later, it was no longer listed for rent. So they're having to come down on these exorbitant rents they've been trying to get. And, you know, people just, it's just ridiculous. That's, well, what they started out at, $2,700 for a 1,700 square foot house is about $1.80 a square foot. And that's ridiculous. You know, a few years ago, it was $1 a square foot or even less.
Okay.
So the market is right now still somewhat of a seller's market, but I'm expecting by the end of the year, it's probably going to be a buyer's market. Although, you know, with the rates coming down, it's hard to predict what that's going to do. That may free up a lot more inventory because, as I'm sure you're well aware, we have the so-called locked-in effect where these people had mortgage rates of less than 5%. In fact, I don't remember all the exact numbers right now, but I did a report on this a little while ago. And it was something like 30% of the outstanding mortgages are less than 3.0, and less than 4.0 is like 45, and less than 5 is like 60, and less than 6 was like 70. So the locked-in, in fact, people did not want to sell.
I am one of those people, but there's ways to get around that with buy downs and permanent buy downs.
Well, yeah, and we can do another discussion on that. I don't know why more people don't use a buy down approach, but we may see that more with, you mentioned the National Association of Realtors lawsuit settlement, and that has affected the way realtors get paid. So we may well see buyers go into negotiations and request a buy down as part of the process. So we'll see how it goes. But with the buyers having to pay directly their agent, and you know, the thing that people don't understand, buyers have always paid. If you're buying, you're paying. That's I don't care if the commission comes out of the seller's commission, you're paying it. Yeah. So, but now buyers think they're paying their own commission, and you know, they're paying it directly unless the seller offers a commission to the buying agent, which I think probably about half will and about half won't. But personally, I intend to continue offering compensation to the buyer's agent because although I do like to sell the property myself and I make more money that way, I want to sell the property for my client, and I need help from other agents to get that done many times. In fact, I only sell the property myself maybe 30% of the time. I'd have to go back and look at it, but you know, I have another agent almost all the time.
Is there an estimated national number on that, Ed? That question just popped into my mind.
I will have to look into that. We can ask Dr. Google over here. Let's see here. Sue.
And I'll ask ChatGPT while we're at it.
Your dogs are staying remarkably quiet, as are mine.
I put two of them, and one's in the big doghouse because I don't know who left something on the patio, whether or not it's a roll of paper towels that's now shredded all over my patio. That's what caused me to be a little bit later than what I wanted to. But what
No problem.
ChatGPT is telling me that when a listing agent sells the property themselves, which is dual agency or selling in-house, it accounts for less than 10% of all sales.
Okay.
And that's
I
coming
do it
from,
a fair amount. Now, I do want to make a point there. You mentioned dual agency, and we all have our area of expertise. In many states, dual agency is not legal. It is legal in the state of Tennessee. Now,
okay.
dual agency means that for the audience, I know you know what it means, but dual agency means that if I'm the listing agent, I represent my seller. But if I also represent the buyer, then I'm a dual agent. So I'm an agent for both. Well, you can't serve two masters.
That's correct.
So when I work with someone who does not have a buyer's agent, then I do it one of two ways. And in fact, Keller Williams requires this. They will not allow us to do dual agency, and that's a wise decision. But I either have the buyer go unrepresented. Now, if they do go unrepresented, I am still obligated to deal with them honestly, fairly, ethically. Any adverse facts that I'm aware of, I have to disclose to the buyer. So, working with me is kind of like having an agent because I'm looking out for both sides. KW's philosophy is win, win, win. If everybody isn't doing good, we don't want to do it. So, we want the buyer to buy a good house. We want the seller to sell their home, and we want to make a little money, but we want nobody to get hurt. So that's about the size of that. So that's what dual agency is. But with a unrepresented buyer, that's the way I do that. But the other way I can, and in fact have done it in the past, is instead of the buyer being, quote, unrepresented, I drop back to a facilitator. So I sign an amendment with my listing client saying that I'm no longer their agent. I am now a transaction coordinator or facilitator, we call it. Okay. And the buyer signs that same form. So that's the two ways to do it. Personally, I prefer just to do the unrepresented buyer because that's easier paperwork. And it really, it's not at a disadvantage to them because in my case, I'm not going to try to cheat somebody. But as I say, I have run into a few realtors that I wouldn't turn my back on. I'll put it that way.
Yeah.
So there you go.
Well, also in a nutshell, which we didn't talk about, when you go after your pre-approval, you absolutely want to deal with someone that communicates well. There are so many times that I get a lot of folks. Oh, Sebastian's here.
No, actually, you haven't met this one. This is Coco.
Who is that?
Coco.
That's Coco.
This is Coco. She's only been with us for 2 weeks. She's
that's why I haven't seen Coco.
Yeah, I bought Sebastian a child bride, but he's having to wait for her to grow up. She was down there snoring a little bit. I don't know if you saw the Doggy Dreams video I did for Sebastian, but he was really having a doggy dream. But she was down there in her little bed beside me here, and Sebastian's under the table. I had to put her bed in here because Sebastian has had his spot under my desk, and that's his spot. She went in there and started rooting him out. So when she rooted Sebastian out, he went away disgusted. So I said, we can't have that. So I brought her little bed in here, and she sleeps in the bed, and Sebastian's still under the desk there. But anyway, sorry to distract you. What were we talking about?
So, when you go into a purchase transaction, you want to make sure in the process, because it takes a little bit of time to get pre-approved, depending on the circumstance, unless there is a contract coming in with it. Or we know there's an offer out. Things move very, very quickly. But it just infuriates me when people have their purchase contract, they, pick their mortgage person or the bank, whatever it is, and then crickets, nothing for weeks and weeks and weeks. And that is very disconcerting to me. You've got myself, I've got teammates. I mean, you do business with us. Well, Ed, as you know, I mean, we talk every day, phone, email, chat, buying agent, listing agent, borrower. You communicate with the sellers. It must stay open communication throughout the process, makes things go that much smoother. And, you know, you should, as a borrower or as a seller under contract, you should never have to wait to get a question answered. Just some food for thought out there.
Mm-hmm. That's exactly correct. And, you know, it amazes me when I call another realtor and number one, it goes straight to voicemail. That's, you know, understandable sometimes if they're with somebody. But if I don't get a call back within 2 or 3 hours, I'm beginning to wonder about them. So,
Right.
And that's what I strive for, is to call back in 2 or 3 hours. Although I do business in the hills of East Tennessee, and there are times when I'm out of cell phone range. So, you know, it may be 5 or 6 hours before you hear back from me, but you'll certainly hear back from me by that night. So,
right.
There you go.
And that's very important, because they are stressful transactions. Even if you have a perfect credit and a lot of assets, it's still stressful.
Mm-hmm. Okay. Well, you think we beat this horse to death?
I think we have.
Okay. Well, I appreciate you, and
I appreciate
look forward
you,
to talking
Mr.
with
Ed.
you again. So we'll sign off for now, and I'll talk with you later.
Okay. Thank you. Happy Friday.
Bye.
Bye.